All right. Ready to dive into some interesting financials.
Always.
You wanted the scoop on Niva Bupa Health Insurance Company Limited's Q2 FY25 performance.
Yep.
And you've given us a ton to work with. We have their investor presentation, the unaudited financials, and even some questions you've come up with.
Yeah, this is going to be a good one.
So let's just get right into it, okay? What's the big takeaway here?
Mm.
At first glance, Niva Bupa seems to be doing really well. Their gross written premium is huge. You have a 1,777.3 crores. That's a 35% jump year over year.
Yeah, and it's not just that number.
Right.
They're actually growing faster than the industry average, which I think shows a possible shift in the Indian health insurance market.
So they're taking market share. More people are signing up for their policies.
Yeah.
Everything looks good, but
Well, there's a but there.
there's a but coming.
It gets really interesting, especially if you're an investor. Despite this growth, they've reported a loss after tax this quarter, at least based on the IGAAP standards.
Okay, so that's a little confusing. Huge growth, more customers, and they're losing money. Let's break that down. First, can you remind our listener what IGAAP is and why it matters?
Sure. IGAAP, or Indian Generally Accepted Accounting Principles, it's basically the set of rules companies in India use for accounting. It gives you a standard way to show how a company is doing financially so you can compare, apples to apples.
So IGAAP says Niva Bupa is in the red. That's not necessarily a deal breaker, especially for a growing company, but it definitely needs more investigation.
For sure.
So let's look at the obvious claims. Have they gone up a lot? Are they paying out way more than they're taking in?
Their claims ratio is a little higher, which you'd kind of expect with healthcare costs rising everywhere. But it's not the whole story.
Right.
They've also been investing a lot in technology and trying to make the customer experience better.
The old spend money to make money idea. But are these investments working? Are they actually saving money in the long run, or are they just adding more expenses?
That's the big question. And that's where their combined ratio is important.
Right.
For Q2, it was 101.3%.
Could you explain what that means for anyone who isn't familiar with insurance terms?
Yeah. The combined ratio basically tells you how much Niva Bupa is spending for every 100 of premium they earn. Anything over 100% means they're spending more than they're making. That's why they have an underwriting loss.
So they get 100, but they spend 101.3 on claims and running the company. Not exactly a recipe for making money in the long run, right?
No, not really.
Yeah.
And that's why this ratio, along with that IGAAP loss, is a bit of a warning sign for investors. It might mean they're having trouble controlling costs or pricing their policies right in this competitive market.
And speaking of spending, there's something else. They're asking the IRDI, the insurance regulator, to basically let them off the hook for going over their spending limits. They've done this for 2 years in a row. Seems a bit risky, no?
Definitely something to watch. The IRDI sets limits on how much companies can spend on things like management expenses.
Right.
Niva Bupa went over those limits. Now they're asking for a pass.
It's like saying, oops, we spent too much, can we have a do-over?
Pretty much.
And has the IRDAI said yes?
Well, they've sent a show cause notice asking for an explanation. So we have to wait and see what happens. If they say no, the penalties could be big.
Okay, so that adds even more risk for investors. They don't like uncertainty. This whole thing with the IRDAI is definitely raising some questions.
Yeah, it makes you wonder about how they manage things internally and if they're good at controlling their spending.
Right, and it also makes you think about their long-term plan. Are they just focused on growing super fast, even if it means they lose money? Are they okay with bending the rules and maybe facing consequences to get what they want? Those are things investors need to think about.
Exactly.
So it's a mixed bag, right? On one hand, they're growing fast and doing new things in the health and wellness area.
Yeah.
But on the other hand, they're losing money, spending too much, and potentially facing penalties. It's a high-risk, high-reward situation, isn't it?
You can say that. And that's why we're doing this deep dive. You can't just look at the basic numbers. You have to really understand what's going on and what the risks are.
Exactly. So let's get into those details. Niva Bupa says their preferred partner network is a big reason they're doing well. They have this network of hospitals that offer perks to the policyholders, things like free ambulance services and discounts on pharmacy stuff.
It's an interesting strategy, trying to control costs by getting good deals with hospitals and making customers happy at the same time.
But does it actually work? Do those discounts really lower their claims costs? And are people okay with having a limited choice of hospitals?
Those are the key questions.
This brings us back to understanding the Indian consumer. Niva Bupa is betting big that people want more than just insurance. They want a whole health and wellness experience.
Right. They're spending a lot on digital platforms, personalized advice, even things like talking to a doctor online. But will that work in India?
Are people ready for digital healthcare? Or do they still prefer talking to agents and having in-person visits?
Good question.
It's a gamble for sure. Whether Niva Bupa's strategy works depends on if they can predict what people want and how those wants are changing.
It's true.
Now let's get back to the numbers. For the first half of FY25, their gross written premium was 3,241.5 crores. That's way up from 2,435.7 crores last year.
Can't argue with that growth.
No, you can't. But like we talked about, their profit is a different story. Their combined ratio is over 100% for both Q2 and the first half of the year. That means a loss.
Yep.
To be exact, it was 101.3% for Q2 and 103.5% for the first half of FY25. So for every euro they made, they paid out over 100 in claims and expenses. Something's got to change if they want to make money consistently.
Yeah, definitely. And looking at what makes up that combined ratio is key here.
Right.
Their claims ratio is now 63.8% for the first half of the year. Last year, it was 62.5%.
So more of their money is going towards claims, which isn't a bad thing on its own. Their main business is providing health coverage, right?
True. But it shows they need to manage those claims well, make sure their pricing is right, and really control their spending.
Speaking of spending, their expense ratio has stayed about the same, around 41% for both the quarter and the first half of FY25. But they're investing heavily in technology. You'd think that would make them more efficient.
You would think so. Maybe it just takes time for those investments to start saving them money. Or maybe they're spending more in other areas, which is balancing things out.
It's a puzzle we'll have to figure out. Now, their profit, or lack of it, they reported a loss after tax of 13.0 crores for Q2 FY25, at least according to IGAP.
But they had a profit of euro 24.0 crores, according to IFRS. Interesting, right?
Yeah, it shows how different accounting rules can change how profitable a company seems.
Right. IFRS, or International Financial Reporting Standards, are rules that a lot of global companies use. The way they handle things like investments is different from IGAP, so the profit numbers can be different.
So even though it's tempting to focus on that IFRS profit, we need to remember that the IWAP loss is what really matters for understanding how they're doing in India.
Exactly.
That loss, plus that high combined ratio, paints a picture of a company that's trying to grow, but struggling to make money at the same time. They're definitely making progress in terms of market share and being innovative, but they need to show they can turn that growth into actual profit.
Yeah.
This brings us back to those questions we had at the beginning. Are their tech investments paying off?
Right.
Is this focus on a whole health and wellness ecosystem, the future of health insurance in India? And can they get through these issues with the regulator without messing up their progress?
These are the big questions that investors need to think about.
Yeah. Now let's look at some other important numbers. Their claims settlement ratio is 91.4%, which seems pretty good.
Yeah, it means they're handling a lot of claims,
Yeah.
which is good for customers. But it's not just about the number. You have to think about the quality of those settlements. Are they fair? Are they on time? Are they really meeting the needs of the policyholders?
Good point. Just because they settle a lot of claims doesn't mean customers are happy. What if there are delays or disputes or people feel like they're not being treated fairly?
Exactly. That's why you also have to look at things like customer satisfaction. Their weighted episodal NPS is currently at 49.
For people who don't know, NPS stands for Net Promoter Score. It basically measures how likely people are to recommend a company. A 49 isn't terrible, but it does show they could do better in terms of the customer experience.
Yeah, it means that they might be processing claims efficiently, but they're not necessarily giving people the kind of service they expect.
And this is really important because they're trying to create this whole health and wellness ecosystem. If they want to be a leader in that area, they can't just focus on products and technology. They have to provide great customer experiences to build loyalty and trust.
Couldn't agree more.
So even though that 91.4% settlement ratio looks good, it's just one part of the story. They have to look at the whole customer journey, from buying a policy to settling a claim. They need to make sure every interaction is easy, clear, and focused on the customer.
Exactly.
Now, their retail health segment seems to be doing really well. It looks like a major driver of their growth. Their retail health GWP hit 2,201.3 crores for the first half of FY25. That's a big jump from last year.
And their market share in retail health has gone up to 9.9%.
Wow.
They say this is because they offer a lot of different products and they use a bunch of different ways to sell them, targeting people at different points in their lives.
So they're using individual agents, banks, brokers, direct sales, and they're really pushing digital sales. Apparently, almost all of their new policies are being applied for online or through their app.
That makes sense.
Hmm.
Going digital definitely helps them be more efficient and save money, but it also makes you wonder about the personal touch.
Yeah.
In health insurance, people often want that one-on-one service.
Right. It's a tough balance. They need those digital platforms to be easy to use, but they also can't forget about customer service.
Right.
Are their agents and customer service people well trained? Can they handle complicated questions and give people personalized help?
Those are important questions for investors to consider. We know going digital can be good for business, but it shouldn't come at the cost of making customers unhappy. Niva Bupa needs to show that they can use technology to improve the human side of their business, not replace it.
Definitely.
Now, they have a network of over 10,000 hospitals, with over 300 in their preferred partner network. They claim this network helps them grow and manage their costs.
Yeah, they talk about things like free ambulances, discounts on meds and tests, and more transparent billing.
Right.
But are those benefits actually good for customers? And are they saving money because of the deals they have with these hospitals?
Those are questions we'll dig into more when we look at their claims data. The success of this network depends on whether it's a win-win for both the customer and the company.
They need to offer real value to policyholders while also getting good terms from the healthcare providers.
It's a delicate balance.
It is. And if they can get it right, it could be a big advantage for them in this super competitive market.
For sure.
Now, before we move on to the next part where we'll really get into their financial statements and how they manage risk, I want to go back to something we haven't talked about enough: their claims management process.
Ah, yes, that's the core of any insurance company.
Right.
It's where they prove how good their customer service really is.
Yeah.
And it's where their profits depend on handling claims efficiently and fairly.
Exactly. So let's put on our detective hats and see how Niva Bupa manages claims from the moment someone files one to the final settlement. What can we learn about how efficient they are, how they handle risk, and ultimately how committed they are to their customers? Stick around for part 2.
Looking forward to it.
Welcome back to our deep dive into Niva Bupa. Last time, we found some interesting things. They're growing like crazy, but still reporting a loss. They're making big investments, but we're not sure if those are actually working. Now we're going to focus on a really important part: how they handle claims.
Yeah, this is where it gets real. If they can handle claims efficiently and make customers happy, that's a huge plus.
Right.
But if it's a mess or people feel like they're being treated unfairly, that can really hurt them.
So let's start at the beginning. How does a Niva Bupa customer actually file a claim?
They've gone pretty much all digital. Customers can do it online, through their app, or if they want to talk to a person, they can call customer service.
That seems smart. Give people options. But what about the details? What do they need to provide, and how long does it usually take to get things started?
The usual stuff, info about the policyholder, the patient, why they're making the claim, who the healthcare provider is. They also need documents like medical bills and discharge summaries. Niva Bupa says they try to process claims quickly, but it really depends on how complicated the claim is and if they have all the paperwork.
Okay, that makes sense. But here's the big question. How do they know if a claim is actually legitimate? Healthcare costs are going up, so fraud is a big worry for insurance companies.
They have a whole system to check for that. They have people who review each claim carefully, making sure everything matches up with the policy and medical records.
Like a team of detectives looking for anything suspicious.
Exactly. And it's not just people doing this. They also use data analytics and AI to spot potential problems. Think about it. They can see patterns of suspicious claims, providers who submit a lot of claims, or things that don't match up between what the patient says and the treatment they got.
It's like how credit card companies try to catch fraud.
Yep. And if those algorithms flag something, they have a special team to investigate. They do random checks and look for specific triggers to stay ahead of the fraudsters.
It's a constant battle, but it shows they're serious about protecting themselves and making sure they only pay for real claims.
Right. And that brings us to the next step, figuring out how much to pay. How much does Niva Bupa actually shell out for a claim that's legit?
Well, that's where their medical knowledge comes in. They have doctors and other healthcare experts who look at whether the treatment was necessary and decide how much should be reimbursed.
It's not just about the numbers. It's about understanding the medical side of things.
Right.
They make sure the treatment is covered by the policy and that the costs are reasonable.
And I'm guessing this is where their preferred partner network helps them. They have those negotiated rates with hospitals, right?
Exactly. Those agreed-upon rates can make a big difference in the final amount, saving money for both Niva Bupa and the policyholder.
It's a reminder that this network isn't just about perks for customers. It's also a way for them to manage their risk and control how much they pay out in claims.
True, but they have to be careful. Those lower rates can't mean lower quality care. Policyholders still need access to good specialists, especially if they have complicated medical conditions.
Right, saving money shouldn't mean sacrificing good care. Now, what about getting the money to the customer? How long does that take, and what are their options?
Niva Bupa tries to do it quickly, but again, it depends on the claim. They can do direct bank transfers, checks, demand drafts.
And for people who go to hospitals in their network, there's the cashless option.
Right.
Right.
That lets people get treated without having to pay a lot of money up front. It's way easier and less stressful when you're dealing with health issues.
It makes things easier for everyone, the customer and the hospital. But even with good systems, things can still go wrong. Claims can be delayed, disputes can happen, misunderstandings. How does Niva Bupa deal with that, and do they keep people informed along the way?
Communication is so important. They're proactive about keeping policyholders updated. They send texts, emails, make phone calls, regular updates on what's happening with the claim. And they have a customer service team that's available 24/7 if you have questions.
So you're not left in the dark wondering what's going on.
Exactly.
And they have that online portal where you can track your claims, see documents, ask questions.
It's all about being transparent and giving people the information they need.
But what if someone isn't happy with the settlement amount or how their claim was handled? Can they do anything about it?
Of course, they have a whole process for complaints where you can raise concerns and ask for a review.
Okay, good.
That's really important, especially for insurance. It makes sure any disputes are handled fairly and openly.
Right, it's like a safety net. Now, with all these processes, how do they actually know if their claims management is working well? Do they just go with their gut, or do they track real data to see how they're doing?
They're definitely data-driven. They track all kinds of things, the settlement ratio we talked about, how long it takes to process claims, and most importantly, how satisfied customers are.
So they're not just celebrating that 91.4% settlement rate. They're digging deeper to see if people are actually happy with the whole claims experience.
Exactly. And to make sure they keep improving, they do regular checks of their process. They make sure they're following the rules and look for ways to get better.
Always looking for ways to improve. So for you, the investor, what do you think about Niva Bupa's claims management? Is it a strength or a weakness? Do their digital investments and focus on communication make you feel good? Or do those regulatory issues and the not-so-great NPS score worry you? Take some time to think about it and form your own opinion. We'll be right back to wrap up our deep dive and help you answer the big question. Is Niva Bupa a good investment? Okay, we've really dug into their financials, looked at their strategies, and even explored how they handle claims. So the big question, is Niva Bupa a company worth investing in?
Well, it's decision time. And like we've been saying, we can't tell you what to do. We give you the information, but you, the investor, have to make the call.
Think of us as your guides, taking you through all this financial data and helping you understand it. But ultimately, you're the one making the climb.
It's a good analogy.
So what have we learned? The good news is Niva Bupa is definitely growing. Their GWP is up, they're getting more market share, and they're doing interesting things in health and wellness, which is a big opportunity in India.
Right. Their idea of a whole health ecosystem, all connected through technology, is pretty interesting. It fits with what we're seeing around the world, people moving from just reacting to health problems to being more proactive and in control of their well-being.
And their investments in technology, while maybe hurting their profit in the short term, could really pay off if they make things more efficient, improve the customer experience, and make claims processing smoother.
Yeah, the if is the key word there.
Exactly. We need to see real results. Better combined ratios, happier customers, proof that those digital platforms are actually useful.
And then there's that whole issue with the regulator, the IRDAI. We don't know what's going to happen with that show cause notice. If they get hit with penalties, it could hurt their finances and make investors nervous.
It's a bit of a gamble, and how they've handled it so far is a little concerning. It raises questions about their internal controls and how they manage risk. Are they being too aggressive? Are they putting growth ahead of following the rules?
Those are tough questions for investors to think about. How much risk are you okay with? Do you believe they can get through this regulatory mess and come out stronger? Do you think their growth will be enough to offset any potential problems?
There's no easy answer. It all depends on your investment style and how much risk you're comfortable with. But it's super important to understand what could happen with this regulatory thing before making any decisions.
Absolutely. Here's what I find really interesting. Niva Bupa's success depends on whether they understand what the Indian consumer wants and how that's changing.
Do people actually want this all-in-one health and wellness platform tied to their insurance? Will their digital-first approach work in a country where people often prefer personal connections and face-to-face interactions, especially when it comes to their health?
Those are the million-dollar questions. Niva Bupa is betting that their vision is right, that people will choose convenience and personalization over traditional ways of doing things.
And that's really the bottom line. We've given you the information, but you have to decide if you agree with their bet. Do you think the future of health and wellness in India is going the way they think it is?
Do you trust them to make their vision a reality? Can they handle the regulations, keep growing, and actually make money for investors?
Think about everything we've talked about. Go back to those sources, think about the big questions, maybe even do some more research on your own.
Investing is a personal thing. There's no one right answer. The important thing is that you make a decision you feel good about, one that fits your goals and how much risk you can handle.
And that's what we hope we've helped you do today. We've gone through the numbers, looked at their strategies, and really explored how they operate. Now it's your turn to take all that and make your own decision.
Thanks for joining us on this deep dive into Niva Bupa. We'll be back soon with another look at the world of business and finance. Until then, happy investing.
See you next time.